Welcome to the Kapital News. I am your host, Alex Kreitis. Today is October 23rd, 2019. Thank you so much for joining me. The title of today's podcast is Fake News in Rigged Markets. Before we get started, I want to apologize for yesterday's podcast. I believe I suffered a little bit of a technical difficulty and I got cut off mid-sentence. I think there was an additional 4 or 5 minutes left in the podcast. It cut me off mid-sentence, I think, in an article that I was reading in regards to some details surrounding Brexit. So I guess it sort of saved us from the boredom and the continuation of kicking the can down the road. There wasn't much that I added to the end of that podcast in the final 4 or 5 minutes, but I do want to apologize for that, and hopefully that doesn't happen again. But if you were wondering what happened, it was some sort of technical difficulty or some sort of technical glitch. I don't know, perhaps talking about Boeing here as much as I have, it came back on me, and we had a little bit of a technical glitch here at the Kapital News. But hopefully that won't happen again. So a couple things that I want to talk about here today is a continuation on Q3 earnings season. I want to talk about fake news, and here it's really centered around Facebook, where CEO Mark Zuckerberg was giving testimony before a House panel this morning. I didn't catch all of it, but I did catch an exchange between Zuckerberg and millennial freshman Congresswoman superstar here, AOC, Alexandria Ocasio-Cortez. So we're going to sort of rehash that a little bit. And then rigged markets. Come on, man. Come on. How many times do I have to update this audience on what the Federal Reserve is doing? Well, they've once again upped the limits on their overnight lending facilities. You can't make this stuff up. I thought I was cynical. In fact, I wrote a book on it, The Cynic's Guide to Investing. You don't get much more skeptical and cynical than this guy right here. I thought this market was nearing its end with this bull market run. I don't know. It's complete BS right now. The numbers are staggering that I'm going to throw out there. They were already staggering to begin with. We called BS a month and a half ago when the Federal Reserve ruled this out and said, "Oh, this is just a one-off, guys. You don't got to worry about this. Don't pay no attention to the guy behind the curtain. Nothing to see here. Move along. No. We told you that was not going to be the case, and lo and behold, that's what's happening, and it's getting even worse. So we're going to talk about that. So a handful of things we are going to discuss. Again, fake news, primarily centered around Facebook and some of the political ads that they will or will not fact check, and then rigged markets, primarily centered around the Federal Reserve, and then some details with some big earnings reports that came out either pre-market or after-market. So let's get started with the market news. We have the S&P up 9 points. The Dow gained 46. The NASDAQ was up 15.5. The Russell 2000, the small cap, gained an additional 2 points for the day. The Dow Jones Transports gave back 0.2%, and the New York Stock Exchange was up a third. Oil caught a nice bid today, a really nice bid. I think it was the largest gain since the Saudi oil field attacks. And we have Brent trading at $55.60 a barrel. And Brent, the international metric, is up at $60.90 a barrel. So it has regained that 60 handle. We have precious metals relatively unchanged from yesterday's podcast. Gold is at $1,489 an ounce. Silver is trading at $17.58 an ounce. Again, folks, I know I say this on a daily basis, but to me it's important. Be diversified. Have precious metals as part of your portfolio. Do your own research. Do your own homework. With all of the central bank money printing, with the negative interest rates going into deeper territory, with the Federal Reserve getting ready to take us back to zero, if not negative, with quantitative easing taking place all over the world. Although you're not supposed to call it quantitative easing, you have to be diversified. I don't know if they're deliberately trying to kill these fiat currencies or they're just that stupid. But either way, it's taking place, and it's going to benefit you to be diversified regardless. So please look into precious metals in some form or another, either having the physical bullion, the bars, the coins, whether it being in ETFs or whether it being in the minor stocks. Please look into it. You have the U.S. 10-year Treasury down slightly from yesterday, but nothing to write home about. Uncle Sam's 10-year is now at 1.76%. The VIX, the volatility index, gave back 3 percentage points and is right back where it was the other day, trading at $14.01. Okay, so that's the market news there. Now, the markets were choppy today. They were pretty choppy. I think for the bulk of the day, they were in negative territory, but they caught some sort of a strong bid at the end of the day. Now, it didn't elevate them, obviously, to any type of new record-breaking high or anything to write home about, but they did close up in the green. And I think a lot of this is back on the liquidity injections that are taking place by the Federal Reserve. This is a rigged market. There is no doubt about it. But before we get to the Federal Reserve and some of these earnings reports, just some other news that's crossing the wires here within the past couple of hours. We have Japanese manufacturing shrinking once again, this time the most since June of 2016, in the midst of the mini recession, the mini manufacturing recession that was experienced in 2015, 2016. The PMI fell to 48.5 in October from a final 48.9 in September, missing a market consensus of 48.8. This was the sixth straight month of contraction in factory activity and the steepest since June of 2016 amid slowing global growth and the following consumption tax increase, which we have noted. New orders dropped the most in near 7 years. Let me repeat that. New orders dropped the most in near 7 years, and overseas sales declined further. Well, you know why, don't you? Because we're not selling soybeans to China. As soon as we start selling soybeans to China, everything's going to be okay. Can you sense the sarcasm? Okay? I don't know how many times I have to say this. I don't know how many times people are going to continue to listen to Thunder Thumbs, the President of the United States, saying that there's going to be a miraculous deal. It was going to be all or nothing. There was not going to be any type of partial deal. Now, there's supposed to be at least a phase one agreement. And of course, there's been some backtracking on that. So now it's going to be phase one. Is there going to be a phase two? You would think. What about a phase three? A phase 25 and a half? A phase 30 and 3/4? I don't know. But it's not going to be a grand deal. It's going to be in pieces. Now, if that even takes place. But I can assure you, ladies and gentlemen, as I've been stating here for months, this global economic slowdown, the cause of it is because of debt. Too much debt everywhere. People being pushed further and further out onto the risk curve, in large part thanks to many major central banks, because they are not allowing these markets to do what they're supposed to do, and that is price discovery. They are continuously being reflated and inflated because they cannot and will not admit defeat. They cannot and will not admit that they have made a mistake over these past 10 years with going to the lower bound of interest rates, whatever that means, because they continue to go deeper and deeper into negative territory, and with quantitative easing. It was supposed to be temporary. It is anything but. And now they are going to put the pedal to the metal, as we have been predicting here for quite a while. The only thing that is really fascinating me right now at this point in time is the fact that the markets seem to buy into this. I mean, we're not at record all-time highs right now, but we're not selling off either. So we're in limbo land again. And I don't know how headlines are going to move these markets and sustain their moves, because they have not done so in the past. And when you have further deterioration, and I'm not done with the headlines here, I just don't get how the markets have not called BS on this one yet. The markets are supposed to have a good nose for BS. Now, understandably, it's not people that are running these markets anymore, it's machines. And these machines are not programmed to make the distinction or decipher whether something is true or accurate. They're simply scouring the internet, and they're reading headlines, and if it seems positive, boom, they're going to start buying. They are programmed to make money. They are programmed to make money at virtually any cost. It doesn't matter if it's ethical, if it's moral, if the consequences dramatically affect negatively millions and millions, if not billions of people on this planet. They are just programmed to make money. That's it. This is a very dangerous system, because a serious question is, if and when things roll over, what will these machines do? Because these machines have been programmed to work in a bull market that has been around for the past decade. They have not seen a bear market, okay? They just haven't. Not to this degree of computer algorithmic trading. So you talk about a flash crash or a repeat of 1987. That could be 1987 on steroids. We have no idea. We have no idea whatsoever. All we know is that these things are programmed to make money no matter what. So be mindful of this. So that's Japanese data there. There's a little bit more because now not only, again, is this the manufacturing, it's now starting to make its way over into the services economy. And that is exactly what we have been predicting here as well. It was just a matter of time. You have the core of manufacturing. These are the high-paying jobs. It's only a matter of time before you start to see those layoffs start to trickle over into the services economy. And that's what we're seeing right now in Japan. So we have Japan services PMI falls to a 13-month low. The PMI declined to 50.3 in October, the lowest since September of last year, from 52.8 in the prior month. And recall, folks, 50 is the battle line. Okay, if you're above 50, it's indicating expansion. If it's below 50, it's indicating contraction. So the services for Japan are still in expansion mode, but at a lesser rate. However, the manufacturing PMI is continuing its sixth straight month of contraction. Now, they're not the only ones. We have Australia services PMI declining in October. PMI declined to 50.8 in the month of October from 52.4 in the previous month. So that's quite the drop-off. And again, that's Australia. So they're starting to feel the consequences of a weaker global manufacturing base as well. And it is starting to make its way into the services economy. This makes intuitive sense. There's nothing scary about this. There's nothing out of the blue about this if you're paying attention. We also have South Korean annual GDP growth remains at 2%. The economy grew at 2.0% in the third quarter of this year, slightly below expectations of 2.1%. Now, on the back of this fantastic Japanese data, of course, sarcasm, worry not, the Nikkei, the Japanese stock market, is at a 12-month high. Again, folks, I can't make this stuff up. We have further deterioration that is going to bring further deterioration, believe me when I tell you. And yet we have the stock market, the Japanese stock market, at a 12-month high. Can you believe this? I'm scratching my head as well. But when you have the Bank of Japan getting ready to print more money, when you have the People's Bank of China printing more money, when you have the Federal Reserve printing more money, when you have the European Central Bank printing more money, and everybody else and their mother doing the same thing, I mean, I guess it does reflate asset prices. But is it going to be enough to cause a melt-up? That's something to be very mindful of. Or will the markets wake up and say BS, and we're in for a roller coaster ride to the downside? I just don't know. All I know is the volatility model here at the Capital News continues to hold water. It has for the past 10, 11 months. I'm going to ride this ship out until the end of the year. And if it continues to hold water, it's going to have to get extremely volatile over the next 2 months. So buckle up. So some of the earnings reports that came out, we have Microsoft, Boeing, Caterpillar, Tesla, and Ford Motor Company. Beginning with our buddies over at Boeing, they are expecting approval by the end of this year, of 2019, by U.S. regulators, the Department of Transportation, the FAA, and any other regulatory board, to have the 737 MAX 8 airliner approved for operations. Now, I sort of laugh at this because I just don't think that's going to happen, because Congress is going to start getting involved in this investigation, and Congress doesn't do anything quickly. So for them to receive approval by the end of the year, I just don't think it's going to happen. Now, we've discussed on previous podcasts that individual airlines are not anticipating that they are going to make these airplanes operational until the first quarter at the earliest of next year. And given my analysis on this, particularly on the back of Congress getting involved, I'm not anticipating that this airliner is going to be approved and will be back in operation until at least the second quarter of next year. And that is assuming that all this is a software glitch and a training problem. If those two things can be remedied, and that's all it is, then this airplane might be back up in the air in the second quarter of next year. If this proves to be a structural engineering problem, if this proves to be some sort of a scandal that prioritized profits and revenues and getting this airplane out in a timely manner to compete with Airbus at the expense of safety, well, then hold the phone. We'd have no idea when this thing will become operational once again. Now, we have Q3 earnings. They fell by 51% for Boeing, 51%. We have the 787 one of their largest airplanes, is that production is going to be reduced from 14 a month down to 12 a month. The 777X, which is a new airline, is dealing with engine issues. And guess who makes those engines? GE, General Electric. See how it's all interconnected? Stay informed. Stay with the Kapital News, guys. And also, and we discussed this previously too, there were some cracks that were found in older 737s, which is causing those airplanes obviously to be grounded on those respective airlines. So not good news coming from Boeing, but they expect approval by the end of this year from U.S. regulators. I'm not holding my breath on this one. However, the executive management did also concede that it's likely going to take longer for international regulators to approve the 737 becoming operational once again. And if Thunder Thumbs, Donnie Boy, if he somehow solidifies some sort of phase one deal or anything with the Chinese, will he be moving on to the European Union? Because he has stated repeatedly that the European Union rips us off even worse than does China. Well, he can't let China get away with it, and he can't let the EU get away with it with those types of statements. Well, you know the competition. You got Airbus, European, and you got Boeing, US of A. Maybe the European regulators will say, nah, we don't think this is operational right now. You know, we're in the midst of this trade war here, and we'd rather sell Airbus than buy a whole bunch of Boeings. And we'd rather the rest of the world buy Airbus as opposed to a whole bunch of Boeings. You know, we're just not going to approve this thing. And they can slow roll it, and they got legitimate reasons to do so. So this could get quite hairy for Boeing on multiple fronts. Stay tuned. We have Caterpillar. They missed both on the top and bottom lines, given market estimates, and they guided lower for the remainder of this year. Of course, they probably didn't get the memo either that soybeans are on the way, and they should start to guide higher. But of course, this is now the game, which we predicted and stated that they're going to continuously do this. These companies, they are going to guide lower because now it sets the bar lower, and it's easier to jump over a low hurdle than it is a high hurdle. So they're just going to start guiding lower, and then they're miraculously going to beat come these next quarters unless things really get bad. And that's a possibility too, but this is the game that these people play, so get used to it. Now, the stock, I believe, Caterpillar, they reported pre-market, and the shares were down, I think, almost 6 to 7% at their worst, but worry not, they closed up for the day as well. And I'll do a quick rundown of these stocks and where they currently sit or how they traded throughout the day. And we have Microsoft. They beat on both the top and bottom line. However, shares were down just slightly in after-hours trading. We have Tesla, came out of right field with a surprise, and they actually made a profit this quarter, shocking everybody. And you have shares rallying after hours. I believe it's close to $300 a share in after-hours trading. That's an increase of about $44 per share, so that's an astronomical beat and a rally in Tesla's share price. And Tesla has become a favorite amongst short sellers, so those guys just got whacked if they thought that the bad earnings was going to continue coming from Tesla. So we're going to see what happens there. There's going to be perhaps a huge short squeeze. I'm sure that's what's taking place in after-hours trading as well. So who knows how much higher Tesla will trade tomorrow. We have Ford Motor Company. Third quarter profits fall nearly 60%. You heard me correctly, fall nearly 60% on restructuring costs. You know what restructuring means. And however, they did beat on revenues. They did beat market expectations on the top line. They did cite weaker sales in both China and the US of A. No surprise there. So that's some of the market news. How those stocks traded, we have Microsoft. It was up about 0.2% today. Who's another one? We have Boeing here. Boeing was actually up 1% for the day as well. Caterpillar closed up, as we had stated, 1.2%. Ford was down slightly in after-hours trading, but it was up during the day. And again, Tesla was up about $44 per share in after-hours trading. So now to the fake news aspect of it. And then we'll get back to the rig markets because I have to close this off with the Federal Reserve, you know, our best friends there over there at the Fed. So first to Mr. Zuckerberg and Facebook. Now, I'm not saying that Facebook is responsible for fake news. I'm really not. But this is the argument that Democrats are now making against Facebook. Okay, at least AOC is, and I've seen some other things across my Twitter feed and some other brief articles that I came across today in regards to the Democrats going after Facebook, because Facebook, they are obviously a huge social media platform. Okay, there's no ifs, ands, or buts about this. This is, you can't debate this. However, with everything that transpired back in the 2016 election, with all of the quote-unquote Russian meddling and their favorite form of meddling and manipulation was to use social media, primarily Facebook, well, obviously it's a big problem. This is ridiculous. It falls flat on its face. To pretend or to believe that 2016 was the first time ever that the Russian government interfered in the U.S. election, stay tuned, I got a bridge to sell you. You are beyond stupid if you believe 2016 was the first time that the Russians interfered in our elections. And if the DOJ and anybody else was to do an investigation, you're going to find that the Chinese intervened. You're going to find that the Israelis intervened, the Venezuelans, the Iranians, the North Koreans, the Syrians, the Saudi Arabians, the British, the Germans, everybody and their mother. And probably some Americans as well. Some teenagers sitting in their basement, hacking into some system. Make no mistake about it, folks. And let's not forget all of the foreign intervention in election engineering and fixing that we do. But of course, it's okay if we do it. Everybody else, you get out of here. It's a crime. It's a crime against humanity. Lock them up. We can do it, and not even covertly, which of course we do, but we can even do it overtly. We can do it on CNN all day long. Don't believe me? See what's going on in Venezuela. I mean, you can't make this stuff up. But anyway, the Democrats are off their rockers. They're trying to ask hardball questions to Zuckerberg, saying, look, you have to be a fact checker. You can't allow people to get out there and just spew nonsense. Do you get the irony here? Democrats saying you can't get up there and allow people to spew nonsense? Are you kidding me? Do Democrats, and this goes both ways, folks, but these are the Democrats who are going, hyperbolic on this here. Do the Democrats ask Verizon or Comcast or any of the television stations that they broadcast on, whether it's CBS, Fox, CNN, it doesn't matter the station. It doesn't matter the station. Do they ask those companies, are you fact-checking these political ads that you put up there? Because everybody knows that politicians lie, that those ads are typically filled with lies. And then you get fact checkers at the Washington Post and the New York Times and the Wall Street Journal, and they say, here's how many Pinocchios, here's how many middle fingers this guy gets because he's talking nonsense. This is what they do. So for these Democrats to pretend to be outraged that Facebook does not want to be a fact checker of political ads is ridiculous. It's ridiculous. It falls so flat on its face. These people are so stupid. It's insulting to our Constitution. It is insulting to this country. What are you supposed to do? If that's really what they wanted, if they really wanted to control free speech, because that's what it is. You have the right to lie. You shouldn't do it, but you have the ability to do it, and you can, okay? Facebook is the largest social media platform, or most definitely one of them, right? How are they supposed to police everybody's speech? How are they supposed to go through all of those ads and check all of them? And to what degree are they supposed to do so? That's what I would be curious to know, if they're supposed to do this. Because you have so many statistics and figures out there. How specific do they have to be? Because if a candidate or somebody on behalf of their campaign, whether it's a super PAC or whatever you want to call them, if they go out there and they say, well, there's a statistic out there, and they round up. Say the actual number is 9.5, but they use 10% in their ad to make their candidate look better. Is Facebook supposed to step in? Or are they supposed to say, well, that's okay. 9.5%, you can round up. We're taught that in elementary school. 9.5%, 10%, that's okay. We're not going to flag that. What happens if it's 9.2% or 9.3%? It's north of 9, but well less than 10. But the super PAC or whoever does it increases it up to 10%. Are they going to call out? Are they going to flag it? Are they going to say, you can't do this? How many people would Facebook have to employ to check all of these quote-unquote facts, all of these political ads? You couldn't do it. You couldn't do it. So what do the Democrats ultimately want? Do they want Facebook to hire tens of thousands of people to constantly fact check all of these political ads? Or do they want to shut down the free speech of people to make claims on a social media platform, which is no different than on television or when those idiots get in front of a podium and they're broadcast on CNN, Fox News, ABC across the rest of the world? You get what I'm saying here? These people are beyond stupid, and they're doing it right in your face. How somebody voted for some of these people is beyond me, and this is true on both sides of the aisle. And we go after both parties. Okay, I do my best to call balls and strikes, but right now you got AOC, who is being trumped up as, the savior of the Democratic Party. She's the new voice. She's partnering up and endorsing Bernie Sanders. So Bernie, he's going to kick the can, sooner rather than later. AOC, meanwhile, has many more years to go ahead of her. Is she going to be the new voice of the Democrat Party? I mean, I hope not. I hope not. I mean, I'm a libertarian, but I don't want this country further divided. And when you got that nutbag blowing hot air all over the place, it's not good for this country, believe me when I tell you. It just isn't. Her ideas are nonsensical, they're too expensive, and they're just not pragmatic. I'm all for having a serious debate if you want to be pragmatic. If you want to understand what the proper role of government is, I'll have a conversation and a debate with you all day. But if you're going to go way off the reservation and live in Looney Tuneville, I'm just going to have to say, see you later. You're not worth my time. You're just not. I'll make my arguments. They will be pragmatic. They will be commonsensical. They will be rooted in the foundation of our Constitution. And I'm going to beat you every day of the week. Every day of the week. Because if I'm one thing, it's consistent. It's consistent. You can go back since the start of this podcast in February, and one thing I am is consistent. You might not like my analysis. You may not like my opinions of Donald Trump from time to time, or the Democrats, whatever side of the aisle you fall on, but I am consistent. And that's what I do here for this audience, like it or not. So that's all I have to say as regards to Facebook, because what are you going to do with this guy, Mark Zuckerberg? How is he going to be responsible for dictating what is true and not? I mean, for God's sake, you can read newspaper articles and they have to retract their articles, an entire article. Oh, well, we were wrong. We put it in the wrong context. Sources got screwed up. I mean, how are you supposed to do this? It just doesn't make any sense whatsoever. And furthermore, I don't like Mark Zuckerberg, for the record, but I have to give him credit, and I do my best to give credit where credit is due. And Zuckerberg made a good point in regards to AOC's questioning, where she stated, what are you going to do? Are you going to fact check or aren't you? Are you going to flag them or aren't you? And he said, well, I think it's important in a democracy, Congresswoman, to allow voters to understand and to learn if politicians and or their campaigns are lying. Great answer. Fantastic answer. And that should have shut her up, but of course she's too stupid to know better. But we'll keep you posted on any updates that go from there. And now to our buddies over at the Federal Reserve. So overnight lending, right? It was supposed to be a one-off back in September. Pay no attention to the man behind the curtain. This is just the end of the third quarter. Companies got to pay taxes. Uncle Sam's got to pay some bills. Don't worry about a thing. We got this all under control. Yeah. Okay. Yeah. Okay. I wasn't born last night. So now, okay, get this. The Fed increases overnight funding to $120 billion. $120 billion from $75 billion. On an overnight basis, folks. Not on a weekly, not on a monthly, on a nightly basis. Okay? That's just the overnight stuff. Then you have the term repo market, and that's increasing to $45 billion from $30. You know what all this means? It means the financial system is crumbling beneath our very feet. There's not enough liquidity in the system. Despite printing vast sums of money over the past decade around the globe, there is now a shortage of U.S. dollars in the system. And the reason that is because everybody took all of that liquidity and they went and they spent it and they borrowed. That is debt. And the piper wants his money. And the Federal Reserve is now fully aware of it. And they're trying like hell to keep this system calm and afloat. The markets are more powerful than all of us, and they should be. And we stated this was going to happen, or something like it, in our book, The Cynic's Guide to Investing, despite the fact that when that book was published in 2015, we said we were bullish. We said there's going to come a time where this is going to flip. that this is going to reverse, that markets will have their day of reckoning with this system, especially if politicians and the Federal Reserve and other central banks do not right their ways. And they have not. They have not. We have trillion-dollar deficits. We've spent $2 trillion to the military-industrial complex. Banks continue to make record revenues and profits. There is no draining of the swamp. We have yet to drain the kiddie pool. We're not even close, okay? So don't give me that. So get off of that Trump bandwagon, too. Not even close to draining the swamp. We've done nothing but polluted the swamp even further. Trillion-dollar deficits when markets and the economy are at all-time highs or the greatest economy ever. Makes no sense whatsoever. And you got these yoo-hoos, these clowns at the Federal Reserve who will not declare defeat or admit defeat or that they've made a mistake. And now they are panicking like hell to the tune of $120 billion on an overnight basis because the financial system is crumbling beneath our very feet. We've mortgaged our great-great-grandchildren's futures. This is why there is such slow growth. It has nothing to do with soybeans and pork bellies. Do you now understand? You better. Thank you so much for joining me. It's been a pleasure having you as always. Please like, share, subscribe, get the word out, and leave your comments. We do love hearing from you. Stay diversified, stay vigilant, and stay with the Capital News. I am Alex Koritis. Godspeed.